Welcome, you're watching the India Development Debate. I'm Tamanna Inamdar. Has the road to a $5 trillion economy become even bumpier? Now, while advance tax numbers are dismal, revenues overall are sluggish, the likelihood of the GST Council cutting tax rates in any significant way tomorrow seems dim. GDP growth remaining around 5% in the second quarter is also highly possible, at least it's looking like it as of now. In terms of action, apart from aggressive rate cuts from the RBI, there has been a focus on easing the credit crunch in the economy caused by the NBFC crisis. To this end, Finance Minister Nirmala Sitharaman has asked public sector banks to hold loan meetings like loan melas, give loans to 5 new customers for every 1 old one, and declare no MSME loans as NPAs until March 31st, 2020. Just listening to some of the announcements she made earlier today.
We did review as to actually what has happened in terms of the liquidity moving from banks towards the NBFCs and from the NBFCs to further the customers who need that money. Scheduled commercial banks sitting with liquidity, the impression that is prevailing outside, banks are sitting with liquidity, NBFCs are not getting. No, the situation is very clearly changing. And the difference is felt in terms of numbers and in terms of the projects that are being discussed also. So in public view, scheduled banks will now show that they are really indeed pushing the liquidity through the NBFCs or directly to the customers. This shall happen in first 200 districts between now, which means from after Tuesday, till 29th of September. The next 200 districts will happen between 10th October and 15th of October.
Now, while the Finance Minister has been announcing measures for the economy frequently, in fact, there are 2 more press conferences tomorrow, one after that crucial GST Council meet, economy watchers are still waiting for big bang reforms that would signal a major shift in outlook to investors. The most important message awaited perhaps is that the government is truly aware of the extent of the economic crisis, something another top minister, Prakash Javadekar, seemed to play down in a conversation with journalists today.
मोदी को लेकर एक सवाल है, कांग्रेस लगातार इस पे तीखे सवालात करे जा रही है, काफी सारी एलिगेशंस लगाई जा रही हैं कि इकोनॉमी को देखते हुए कुछ नहीं कहा जा रहा है गवर्नमेंट की ओर से, लेकिन हाउडी मोदी को प्रमोट किया जा रहा है।
सरकार ने अर्थव्यवस्था को मजबूत करने के लिए हर कदम उठाया है और मैं फिर से बताना चाहता हूं, भारतीय अर्थव्यवस्था के फंडामेंटल्स मजबूत है और कोई हमारा ऐसा क्राइसिस का स्थिति नहीं है। साइक्लिकल एक नॉन बैंकिंग फाइनेंस कंपनियों में कर्जा कम देने के कारण कुछ रिएक्शंस हमें दिखती है, लेकिन सरकार लगातार स्थिति को संभालने के लिए लगातार उपाय करती है। यही तो सरकार की एफिशिएंसी है, तो ये सच नहीं है। और हाउडी मोदी में लोगों ने बुक करके पूरा स्टेडियम पूरा हाउसफुल हो गया। अब इसको कांग्रेस में तो ऐसा कभी नसीब नहीं हुआ, तो उनको अंगूर बेर कुछ भी कहो खट्टे लगते हैं।
All right, so is the government in denial about the extent of distress in the economy? We know there are daily press conferences and very frequent briefings from the finance minister, but then here you have another top minister, Prakash Javadekar, who's a senior member of the Council of Ministers, saying that there is no real crisis. Also, is this daily drip of piecemeal measures the right approach to revival, like the ones we've seen today? To speak on this and more, I'm joined this evening by Zafar Islam, national spokesperson of the BJP, and R. Bhanumurthy, professor at the NIPFP, R. Shira, resident editor at the Economic Times, and Madhavan Narayanan, senior journalist who also tracks the economy very closely. Welcome to all of you, and thank you for speaking with us. Zafar Islam, I want to come to you first on a quick reaction to what Minister Javadekar said. And of course, the context was the Howdy Modi tweet that Rahul Gandhi put out a few days ago, yesterday in fact, making the point that what about the economy? And that may be a political point, but to say that there is no real crisis seems to be a bit of denial, isn't it?
Not at all. I completely disagree with your argument, Tamanna, because there is no crisis as such. Yes, there is a slowdown, and we do accept there is a slowdown. It's not only in India, and this problem not restricted to only in India that there is economic slowdown. If you just see the global economy, which has also sliding down in terms of GDP growth, which was earlier last year was 3.70. Now the latest forecast suggests that it will come after 2.90. So there is a 80 basis slide in global GDP. India does not exist in isolation. It is an integrated economy with the global economy, and I'm sure that if there is a slowdown in the global economy, it has to have impact in Indian economy as well, which is also being faced. But what is more important, and why we say that there is no crisis, because economy is growing. Last quarter was 5%, of course, and we see that there could be another pressure, maybe because of the liquid credit flow is still, as the Honorable Minister was saying, that credit flow is concern is being addressed. So I think there could be another quarter or so, you will see some minor come off in GDP number, but you will see a huge reversal going forward, purely because all the interim measures and the policy measures which have been taken by the government in consultation, these measures have been taken after consultation with the MSME, with industry group, with the business group.
You're making 2-3 points. First of all, you're saying that there is no crisis. So you're sort of echoing what the minister has said before. If there's no crisis, then the kind of communication that we're hearing.
There is slowdown.
Yeah, but you think there's no crisis. Well, how do you define a crisis? How do you define a slowdown? So your number one claim is that there is no crisis. Your second claim is whatever is happening is because it's happening in the global economy. Now that could be contested. And your third is there's no crisis because this government is doing things to fix it. Now, just because there is an attempt to fix it, and we do not know yet if these will work, if they are right or not, there are debates on that, doesn't mean that there is no issue. The first way of resolving an issue is to recognize the extent of crisis. And that is what I'm coming to. I think it's time we recognize the kind of situation we truly are in, Mr. Islam.
Tamanna, can I just respond to this question, please?
Yes.
I do agree with you partly purely because the government should recognize, and let me tell you very clearly, the government and the Honorable Prime Minister, Honorable Finance Minister do recognize what is the stimulus economy requires, and what is there is a slowdown. It's not a crisis. There is a slowdown. You must be able to differentiate between crisis. Crisis we have seen in Venezuela, crisis we have seen in many South American countries, crisis we have seen in some European countries, but not India. There is no crisis. As I said, there is a slowdown. Economy was growing at a 7% rate, but it is now last quarter was only 5%. But overall weighted average last several years, if you see, economy has grown over 7.5%. So why do you say that's a crisis? Yes, there is a slowdown.
Wait. How do you define a crisis? One of the ways, 1 minute, Mr. Islam. Okay, I don't want to nitpick with you. You can call it crisis, you can call it slowdown, you can call it bad times. So the definition of a crisis is a time of intense difficulty or danger. Are we in a time of intense difficulty? We are in a time of intense difficulty. Sector after sector is in trouble. Madhavan Narayanan wants to come in. We're
not at all.
It's not a pinch. We have to.
No,
to admit. 1 minute. Let Madhavan Narayanan come in. We have a broad panel. I want everyone to come in on the panel as well. Madhavan, I just want you to respond to some of the initial points that Zafar Islam is making. And this debate is beyond the use of the word slowdown or crisis. The larger question is, are we recognizing how deep the problem is? Because only once we do, we will come up with solutions that big. Right now, the solutions largely seem to be piecemeal, and I'm including some of those which were announced earlier this evening.
Let's rock the India development debate today. I was a bit nostalgic today after Mr. Javadekar said what he said, because I was reminded of my teenage years when there was a British progressive rock band called Super Tramp, which released an album which showed a man lying on a beach chair lounging amid a polluted landscape with all chaos all around, and the title of the album is Crisis. What crisis? So this is very symbolic that when you have problems all around you, you're relaxing and pretending nothing has happened. So export as a share of GDP in India is very low. So Mr. Zafar Islam's argument that it's part of a global slowdown doesn't quite wash. It applies only to merchandise exports, doesn't even quite apply to remittances. That is a hard fact. Let's look at the quarterly growth rate at 5% for India should not be compared with global growth rates, because 5% for India is way too low, especially in the context of Mr. Narendra Modi having talked about a 5 trillion economy, and Subramaniam Swamy, who is a BJP member, has himself said please say goodbye to 5 trillion as a mark at this rate. And then we have Rajnath Singh talking about 10 trillion, and unemployment rates remain among the highest. We haven't had any corrective data to suggest that anything has been reversed. We are in a demographic transition, and the only sweet spot in the economy, as I've argued, was low inflation, which has been hurt after the oil spike this week. So the elbow room to raise interest rates is down. Shaktikant Das, the governor of Reserve Bank of India, has just said the room for fiscal pumping up is low.
Yes.
And there is nothing in terms of significant foreign direct investment. One statistic says there has been a remittance of Indian investment money going overseas. In this context, what we need are not palliative bubblegum statements from the government. Yes, I understand that some of the steps announced by Ms. Nirmala Sitharaman to revive the NBFC problem is somewhat nice. There's a feel-good statement.
Yeah.
But I've just heard Rashesh Shah of Edelweiss saying in an interview to Bloomberg that he hasn't seen such a risk-aversive mood among investors in the banking community in the past 30 years or 33 decades. And please, last but not the least, four times this year interest rates have been slashed by the RBI. If after this the industry sounds gloomy, if you don't call it a crisis, pray, what do you call it?
Yeah. No, and not what.
So,
what,
all the
what
facts
are
are
you going
there.
to achieve by playing it down? That's my question. What are you going to achieve by playing it down? And that's the real concern. I'm coming to you, N.R. Bhanumurthy. I'm coming to you, R. Sriram. Let me just get.
Can I just respond
Let
to
me just
that?
get a quick response from Zafar Islam, and I promise I'm coming to you all to peacefully, decode the further points of debate. But Zafar Islam, my issue is not with the word crisis or slowdown. My issue and concern, I wouldn't even call it issue, is with the sense that we are trying to play down what's happening and saying, okay, there is a bit of a trouble in the economy, but look, there are other things that we are doing. You know, there are distractions, there are attempts to pose other headlines. This is the biggest issue right now. There is no question about it. Let's tackle it head on. Let's do it all together.
No, no, Tamanna, let me explain to you. When we say that there is no crisis, definitely we mean it. Purely because all the macroeconomic parameters looks very sound, and economy is in very sound footing. Why we say that is because the numbers, if you just compare all the parameters you compare with 2013, then you will find out that, well, whether it's inflation, whether it's primary deficit, whether it's a fiscal deficit, whether it's
I'm sorry, I'm just going to stop you there.
Foreign reserves.
I'm going to stop you there.
You
I'm going to
take
stop
all
you
the
there
numbers.
for
It
just
will
a
look
second.
very, very
For just
good.
a second.
No,
For just a second.
what is?
I'll tell you
what
why
is-
I'm stopping you. And then you continue. Listen to me. You said if you compare with 2013. Why should I compare with 2013? Because that was the last time there was a different government in power. That's your concern as a politician. That's not mine as a citizen.
I agree. So
I don't
so
care
why
what
should-
was happening in
should you compare?
2013. I want to know
Why
what's
should you
happening today.
compare? No, why you should compare? Well, exactly. So why you should compare? I must give you the reason for that.
Yeah.
That in 2013, if you can remember, IMF has said and the global World Bank has said that there are 5 fragile economies in the world, and India happened to be one of them, because all the macro was looking so bad, terrible at that point in time. But today, compare. That's the reason why I said. And if you must remember that during 5 years of Modi rule, we have been upgraded. Indian economy, India as a country has been upgraded
where we
purely
went and did
because
something
all the
like
numbers, macro
demonetization.
number was giving
And
that
again,
was
Zafar
lending
Islam, I
that
don't
kind
have
of
a Congress
confidence.
person on this debate. I have called you also because you've had banking experience and you understand the economy. So there's no point making a political point. When you tell people, look what happened 5 years ago, who cares? You got re-elected in 2019. You need to fix the economy today, not pretend that nothing is wrong. That's my simple point. I want to get NR Bhanumurthy in.
let me-
Sriram in one
let-
minute.
let me res-
And let me just get NR Bhanumurthy in and let me at least get his, opening thoughts on what we've seen. Professor Bhanumurthy, if you have any comments on what Nirmala Sitharaman has announced a little while earlier, and there was some commentary coming in, rightly so, just after her announcement, that it's all well to say that you want to increase the amount of credit in the economy, you want transmission of rate cuts, you want liquidity to come back, but going back to these loan mela kind of model, telling banks that for every single existing customer you have to get 5 more. Banks know how to do their business. They will lend to those who seem sound in terms of credit worthiness. Is this the approach that we need? I just want your views on that before you move to the bigger point of whether we're tackling the problem as much as we should. Yes, NR Bhanumurthy.
Yeah, I think to be fair to the government as well as to the RBI, they have been providing some kind of policy, stimulus, both in terms of reduction in the interest rates as well as some of the banking sector issues that the finance minister has been trying to chase for the past 3 weeks. But unfortunately, what really happened is that it has not really triggered the revival in the credit offtake. And I think what finance minister seems to be thinking is that there may be some issue with the credit supply, and that's what she may be thinking, that by pushing the banks through the loan melas, they may be able to supply more credit to the needy people. But I am afraid actually there is a issue of both credit demand as well as credit supply. Now what we have seen today, if you look at the State Bank of India has really made a drastic point today. They discontinued the scheme which was supposed to be linked with the repo rate. Yeah. That itself shows that the public sector banks are also not in a position to really push the credit to the needy sectors. And at the same time, in my view, I think there is also a problem from the credit demand side. I am not really sure, even if you reduce the interest rates, Tamanna, I have been arguing for quite some time, even if you reduce the interest rate by 100 basis point in the next round, we are not very sure whether there is going to be a pickup in the credit demand. The credit demand depends on many factors in addition to the interest rates. So I think what is more needed is there is a need for revival of the overall demand, not necessarily the credit demand. And I think that's where many of us have been arguing that there is a need for fiscal stimulus. And today, yes, the RBI governor made a statement that we don't have much space, but I think we are not really sure whether we are there in a situation where we follow a pro-cyclical policy. I think country like ours need to go for a counter-cyclical measure, even at the cost of slippage on the fiscal deficit for 1 year or so, so that you can revive the overall sentiment in the economy, so that you can revive the overall animal spirits in the economy, so that you will see that revival of the growth. Otherwise, by doing this kind of pushing the credit supply to the districts and all those things, I don't think it is going to really help much, except that it shows that the government is willing to go forward in terms of reviving the overall sentiments in the economy.
No, but will sentiment be revived by this level of communication? Is that going to be enough now at this point? Sriram, I want to welcome you to the debate, and apologies for coming to you so late in the conversation, but I think you've had a chance to hear everyone's views at this point. My simple question to you is, and we've been tracking this for a while now, you've been part of many of those debates. Are we now going too slow with what we need to do? We need to look at the big ticket disinvestments. We need to look at some maybe tax cuts, which the GST Council seems to be in no mood to do from what we hear so far. We need to look at some relaxation in your fiscal deficit targets. Do you look forward to some of those things, and maybe not go into the nitty-gritties of how many customers PSU bankers are actually getting on board?
Tamanna, the important point I think was made by Mr. Bhanumurthy, the gentleman who spoke just before me. There is a problem of credit demand, and why is there a problem of credit demand? One of the reasons, and there could be many reasons, one of the reasons is something that we have also discussed on this program quite a few occasions. in the past. One of the reasons is that there has been a dramatic increase in the level of household debt in the last 5 years.
Yeah.
And there has not been a commensurate increase in the level of household savings. Now, this has come at a time, a lot of the growth that we have seen, the consumption growth that we have seen, the auto sales growth, the personal loan growth, the housing growth that we have seen has been built on the back of a debt binge, if one would use that term. Households have borrowed heavily, and that can be seen in the level of household debt that has gone up. And they have added to, and they have bought cars, they have bought houses, they've gone on holidays, they have spent money. None of this is wrong, but it has also come at a time when the savings haven't grown at the same pace, and at the same time you have this uncertainty about the fact that whether there will be job losses, or there will be, and at the same time you also have this issue where salaries and increments haven't really grown at a fast pace, haven't really grown at the pace that we have been used to probably 7, 8 or 10 years ago. So you have a situation where everybody is sitting tight, trying to consolidate, being very wary of taking on any new debt and adding to their burden, and at the same time being wary of making any new purchases. You've seen that in auto sales, you're seeing that in two-wheeler sales also, for instance. You're seeing that everywhere. So that could be one of the major reasons, and that cannot be solved by doing loan bailouts. That cannot be solved by pushing loans by banks to customers. Now, in the short run, that will help, but in the long run, it will create the same problems. Now, you can very well say that MSMEs, you don't need to declare them as NPAs till March 31, 2020, but how is that going to help? You can tell banks that do not declare MSME loans as NPAs and try and resolve the issue, but how is that going to help? It's going to create the same problem that we faced 5, 6, 7 years ago.
No,
it's going to create the same problem. It's going to create the problem of evergreening. It's going to create the problem of where the loans or the bad loans are getting pushed under the carpet, and it probably it's also going to increase corruption, because somebody is going to say, okay, I will take care of your loans and take care of your bad debts, and this is what is going to happen. This is what you need to do, and this is going to take a while. It's not going to be solved by some big bang announcement or a magic wand. What you need to do is to create conditions for people like you and me to go out and spend, go out and borrow, and go out and have a good time, if one were to say that. We are not doing that now because we are cautious, we are wary, we are watching what we spend, and we don't want to spend more. Now you need to make people spend more.
So
how do you do that?
Question.
Through investment, through more money into people's pockets.
How do you make people spend more? That's the key question. And I just want to do a little plug in here. Ahead in the show, we're going to launch the first of our series of conversations on the road to the $5 trillion economy. I'm going to play out for you a conversation I had with Adi Godrej, and a fantastic one, because he speaks specifically on this point, on what exactly the government should do to increase discretionary spend and expenditure. So just a quick plug over there. But Madhavan, I want to come back to you on the point you were making. Why not push for some kind of a tax cut? I want to talk about what Tata Motors has said today. Chief of Tata Motors say that please make up your mind on GST cuts. People are not buying cars because they think some GST cut is going to come. If you're not going to give us one, then tell us. Put us out of our misery so that those who are on the fence can at least make a decision. I'm talking about policy and decision making like that. Madhavan, and then I'll come to you, Zafar, but let me get Madhavan's point of view in. Yeah.
I think the important point you made, Tamanna, even at the beginning of the show, I'm all for GST cut because we have reached a point, Dr. Bhanumurthy said it very well, the fiscal deficit is not as big a problem as it's being made out to be, and connecting the dots between what Dr. Bhanumurthy said and Zafar Islam said, my own feeling is that this government is confusing macroeconomic stability with growth push. Now, what has not been said during the course of this debate but has remained an undercurrent is that the word structural slowdown has not been mentioned throughout, and what we are going through is a structural slowdown of which the demand crunch is a part of it. It is both leaning on structural slowdown as well as it requires a separate sector specific answers as well. Such as maybe an automobile thing, but we haven't even mentioned agriculture because we do have a huge demand engine cannot be justified purely by some of the household income and saving stuff that Sriram spoke about. We need a huge humongous demand push, and basically some sort of a pump priming may be in order, but if fiscal room is short, the alternatives include a sovereign borrowing of a certain kind that will push up the infrastructure spending. But one thing I need to say, especially in the light of what Sriram said, is that we cannot have a household debt economy going up without sufficient incomes and savings. There has to be a harmonization between savings, incomes and debt. And it's also worrying that the banking system is not passing on interest rate cuts, and we are all at some level paying the price for the moral hazard and the NPA profligacy that was
No, but they're
witnessed
trying to fix
earlier.
that.
And
Madhavan, they're
this
trying to fix
requires
that, to
an
give Nirmala
inspired-
Sitharaman credit.
One small point.
No, she's trying to fix that. She's trying to fix that. But
Yeah,
you know,
yeah, one small
Shriram's point is that you have to get people's incomes up. Then they're going to want to take these loans on. You need credit demand as well.
Exactly. For this, two important steps need to be taken, which
Yeah.
are not visible.
Yeah.
We see band-aid steps, but what important things are? One is a large-scale demand push, which could be through increased fiscal deficit or something like that. The other is also we need to urgently address the NBFC problem, not through mere credit offtake solutions, but also there is a fear haunting the financial system in the aftermath of the ILFS and DHFL problems. And right now Altico has joined the party, if one might call it a party. So we need some kind of a mood stabilizer for the financial system so that people will lend without worrying. There is a demand side problem to the credit offtake. There is also a supply side problem. These need to be collectively addressed, and that is where some of the structural issues lie in finance. And then there are structural issues in the manufacturing industries for which we need to. Maybe GST is one of the options, but we need to get a little bit smarter than palliative band-aid solutions.
1 minute. I just want to play out a reaction coming in from Sunil Mehta, MD of Punjab National Bank, soon after some of the measures that the finance minister has announced earlier today. Let's just listen to what he's saying.
We don't foresee any challenges. I think few banks have already done it successfully, and we can repeat that.
And so, do you think the asset quality will suffer because of the merger, incoming merger?
Not at all. Why should it suffer? Rather, it will strengthen because they will have a collective bargaining and negotiating power with the defaulters.
And what lies next in terms of preparation for the merger? Because the shareholders have already given you the individual banks have also given the notes to their banks. And what lies next? What in terms of roadmap?
I think in terms of roadmap, we have already created the committees, interbank committees, which we are interacting with each other to find out what is the best processes, what is the best product, what is the best system adopted by each bank, and the best will be selected for a win-win situation for the customer. Similarly, the best practices among HR will be adopted for the staff, which will help them in so this is all going to benefit the entire system.
All right. So, what about the rate transmissions? Are they happening smoothly now?
Yes, they are happening.
They are happening to the customer.
So, on today's decision that was taken, because a target has been set for every old customer and five new customers have been bought. How do you ensure that the asset quality is maintained in such cases?
No, asset quality will not be diluted where bank has got their established system and processes.
Right.
Only thing is you increase your speed of disposals, that's all.
Right.
Otherwise, it's not going to dilute any of the underwriting system and processes the banks adopt for giving loans.
So, is there
There was an interesting comment, because the question to Sunil Mehta was that if you're going to have to be forced to lend, and it's a mandate, that for everyone you have to lend to 5, how do you make sure your asset quality is fine? So he's saying, of course, we have systems in place. Zafar Islam, very simple question. Banks already know that it's their job to lend. They want more customers. There is no bank which doesn't want more customers, which says, no, I just want the ones I already have. I'm putting it. So what is the point of this? What is the point of sitting on their heads and saying lend? And how will you then ensure
Tamanna,
that you don't have rubbish
let me
credit
give you some
quality?
stat.
Yeah.
Let me respond to you, and I think I will take you back to 2016. So from 1947 to 2006,
Okay.
we had a loan book of 18 lakh crore,
Yeah.
all public sector put together. From 2006 to 2012, it ballooned to 52 lakh crore, means 3 times merely in 6 years. So during these 6 years, the loan which was disbursed by the same bank which you are talking to, they were the employees, but there were pressure from the ministries, different ministries, and particularly from the Prime Minister office at that point in time to sanction loan which actually does not worth sanctioning. Let me give us some statistics which you will appreciate why we are taking utmost care today, because all the loans which has been disbursed during 2006 to 2012, if you just discount with the discounting rate all the future cash flows, you will, the EBITDA of all the 67% of those projects is EBITDA negative. What does that signify?
Well,
that
what does
signifies
that have
these
to do with
projects which had
anything
been
I'm
sanctioned
asking?
during that period
Zafar
had to be
Islam, I'm
was
afraid-
NPA
No, no,
from
I'm
day
sorry.
one.
Don't
Day one it was
don't
NPA.
scream, sir. Don't
Today,
scream. Don't
just a
scream.
second, just a
Don't
second.
scream.
Allow me to
I'm
complete. You
saying
don't interrupt
कि
me,
ये
please.
मेरे सवाल से
Just
क्या
allow me to
no,
complete.
I will have to interrupt because your answer has nothing to do with my question, sir. You are unfortunately
I'm just trying to-
there is an
Today,
BC and
what we are
AD.
doing, the
You are
committee is what
before
the-
2014 and after
No,
2014.
committee, allow me to complete.
We're in
please.
2019.
No. I'm just making a comparison. Today, all the loan will be sanctioned. There is a committee will examine, and they will also
MP
ensure
and
two things.
MLA
The
will
proper
go to the
credit
loan
evaluation
mela.
process has been-
MP and MLA will go to the loan mela
has been maintained.
and
Secondly,
decide. 1 minute,
whatever
Zafar Islam, 1
assets-
minute. MP
whatever
and MLA
assets
will
you
go
take
to
as
the
a
loan
collateral,
mela and
that
sit
is
over
the
there and
collateral.
see that who the loans are being given to. It might work. I'm not even saying it's a bad measure. Is that what is needed?
No,
I want to
see,
understand if that's what
you
is
have to
needed.
understand two things. No.
Yeah. And
No.
One second. let
If
me
you
come
go
to
to any loan mela or for that matter anywhere where you propagate or populate your product,
We are in
does
the
not mean
middle
that you are
of-
going free of cost.
No, we are.
You have to.
No, I understand that. Even I
You are-
understand
you are-
it's
you-
not like
you
public
do-
sector banks are going to
you
give
do
out wads of
advertise,
cash
you do-
and not take anything in return. But I'm saying, is this what is needed right now? And have we addressed the question of a credit demand, a sluggishness in credit demand? I want to come to N.R. Bhanumurthy because I saw you responding to the point that R. Sriram made and what we were talking about earlier about how do you get people
See,
to
I have
want
not
to
been
consume
able to
more.
answer all the questions which had been raised.
I will come to you. Zafar, someone. I promise after this I'll come to you. I promise I'll come to you. Let me just get his point in on this. About the question about how do you get people to want to consume more? Whether it is loans, which then in turn they will use on expenditure. That's the basic idea, isn't it? And how will you put more money in people's hands unless you effectively, perhaps at first end, cut taxes?
Yeah, Tamanna, I'm not really sure taxes alone would really play a game again. Now, the basic problem right now the economy is facing is that complete demand slowdown. Now, by cutting tax, whether we are going to revive the demand, I think that's an empirical question. Now, there are many people who argued that even if you reduce the GST from 28% to whatever 18% for the automobile, you may not be able to see a kind of demand for the automobile sector. So, I think what is very important right now is for the fiscal to push more money to the hands of the people. And to be fair to the finance minister and finance ministry, in the last two rounds they tried to do that by front loading many of the expenditures. Now, in fact, the capital expenditure for that matter, they are trying to front load. In fact, they are also trying to ask the departments who are sitting with unspent money to be pushed for expenditure purpose, so that there would be some kind of a demand at the rural at the ground level. I think one thing that they need to really do a little more aggressively in my mind is that to push lot of money to the rural sector.
Yes.
They already have budgeted lot of money for the current year. I think Rural Development Ministry is one thing that they have been allocated lot of resources, and they don't need to wait for December or March to really spend those money. I think it's very important for this ministry to really push this, like for example rural housing scheme,
Okay.
or under the scheme of MGNREGS. I think they need to really increase those spending so that there will be revival in the demand. I think that will actually have a virtuous cycle impact on
And we may,
other sectors as well.
We may hear some of those announcements, fingers are crossed, because we have another set of press conference today. R. Sriram, government spending is the way to go. We need to spend our way out of it. Governments need to spend our way out of this.
I'm not sure if that is really the answer. I mean, that may create a lot of other problems in the future. Now, to come back to the point of fiscal deficit and fiscal stimulus, if what the critics have been saying is right, that our combined state plus center fiscal deficit is now hasn't really gone down in a meaningful way from 2013-14 onwards. It was more than 6.5%. And you are also not including the amount that is being spent by the various central public sector undertakings or organizations like the NHAI and others. You already have in some way some kind of a fiscal stimulus, because the government fiscal deficit, the central government fiscal deficit may not have gone up in a significant way, but the states are also spending, and at the same time the organizations like NHAI is spending, and the government is actually guaranteeing the or paying for those loans or paying for the interest that is taken by HUDCO and people like that, organizations like that. So in a meaningful way, you already have some kind of a fiscal stimulus, except that it is not coming from the coffers of the central government in a direct way that it used to. So I'm not sure if government spending is the correct way, but I think to revive, to go back to this broken and this widely used phrase that to revive the animal spirits, you need a combination of some fiscal stimulus, but it should be carefully calibrated so that you really don't lose out on the gains that you have made. And at the same time, you need some effort to lift investment and lift consumption. Now that can come in the form of some direct tax cuts, and I think if the government in the next budget can cut the corporate tax and can accept the DTC, the direct tax committee report on the new set of direct tax slabs, that will probably go some way in helping this thing. You need all these measures. You need to lift investment, you need to lift consumption, and you need to keep up a certain level of government spending which is calibrated to ensure that your fiscal deficit really doesn't run off the rails. That would be probably be the way to go forward.
So the point, Zafar Islam, is it's not that anyone doesn't want a $5 trillion economy. We all want to grow. I don't think anyone is happy that India has gone from 6th largest economy to 7th instead of 5th, right? The question is, how are we addressing it? Are we first of all looking clearly at what our situation is like, and are we ready to bite the bullet on big measures that are needed and not go on and on about little announcements that are made? Increasing money in the pocket of people, increasing the amount of money in the pocket of people has to be step one.
Let me give you again an argument. I think that all the panelists should examine it. See, as far as the Government of India is concerned, Government of India every possible way has ensured, whether it's through 7th Pay Commission or through tax rebate, that the common man should receive, or the government employees should receive should have better saving, because they will have more disposable income at their hand. But in the private sector, and I agree with Mr. Sriram with the first observation he had made, then private sector, if you just compare with the last 2 decades, the salary component in the private sector has not gone up, despite if you see the corporate earnings during that period had gone up significantly. Percentage, I think even core sector, their profitability percentage of GDP had gone up significantly, yet the salaries of the employees had not gone up. So that is another concern which I think the private sector should address. The government cannot push private companies to pay more compensation to their employees.
I'm glad to hear you say that.
The government has,
because that's the last thing we need. The government's mandating.
No, but that is the.
Please give this much salary.
I can give you many statistics. I can give you many statistics to support this argument. Purely, if you just compare what the entry-level people, engineers were getting in Infosys in 2003.
No, it's a lived experience. It's a lived experience. People will agree with you. But is that the fault of the private sector? Okay,
another public sector, just pick.
Yeah, because I have little time, I'm just going to get a quick response from Madhavan. Yes, Madhavan.
No,
I think both Zafar Islam and Sriram are right to the extent there is already a leveraged middle class in the form of high household debt, and there has been a stagnation of salaries because of an increase in the workforce, which basically, and as Mohandas Pai once said recently, there are lots of jobs going for 10,000 to 15,000 rupees a month, but we aren't seeing true surge in disposable incomes, and the only way as I see it is to have a sector specific responses. Real estate is one sector in which the government can take more risk as some kind of a market maker. You know, there's a big inventory pile up, and this is not the good news about real estate, that it has some kind of a collateral and asset link up, unlike, let's say, so the chances of evergreening of loans are lower in real estate. So we need a more workman-like approach to the structural slowdown, in which the shape of the fiscal deficit is more important than the quantum. So it's not a simple counter-cyclical measure anymore. It's also about the way you structure the shape of the increased fiscal spending. And for that we need Niti Aayog, who's been talking too much about blockchain and electric mobility, to get some more details in on the structural slowdown. I don't think it's the finance minister's job. We need some more deep insights into
look,
this.
for one thing that you can say that India never has a paucity of is people with opinions. We showcase a lot of them every evening on this show, but the government has access to a lot of bright minds who have been giving all of their views very often. I must, in the middle of all of this, commend the finance ministry and the finance minister for one thing. In the recent past, it has been rare to see a finance minister who has been so vocal and so communicative about what the plan is, what the progress is, and what she aims to do next. That's a good start, but we need to see bigger announcements. We'll take a very short break, but our talk on the $5 trillion economy doesn't end here, because we're launching a very special series. How do you chart the road to $5 trillion? We're speaking next with Adi Godrej, chairman of the Godrej Group, who you've possibly never heard him speak like this. He's pulling no punches on the economic slowdown, on the road to $5 trillion economy, and why harmony, social harmony, is so important for the economy. Don't miss it. Coming up next.